How's it going, guys? Quick video here for Jay4Profit. He asked me in the chat, what's going on with EV and charging sector? It's kept going down since mid-February 2021. Can you share your thoughts? Yeah. So I would. I think the answer is a bit more simple than people may want it to be. I think it's simply that what happened in mid-February 2021, right? That was when the big growth crash happened, when the speculative kind of bubble or area of the market popped. And along with that was a lot of EV and charging plays just trading at astronomical valuations. I've really never made a video about a stock that I didn't want to buy. Like, why would you make a video about a stock that you're not interested in? The only time I did that was with Arrival, which was CIIC SPAC, I believe, back in the day. Now ARR or ARVL, I think. And I was made the case that I think Arrival could be a great company and it could be one that shapes our future. But at that point in time, the valuation did not make any sense. And I made a whole video about why I didn't think it made sense and why I thought it was just too expensive. And I think a lot of the charging and EV sector got caught up with the growth stocks because they were making these big promises. Anyone can tell you that EVs are the future, right? And I think a lot of people agree on that fact. And so many people wanted to get into it. I think it was a lot of momentum, right? Personally, I believe Wall Street's not dumb. Like, they are going to recognize patterns, see what retail traders are doing, especially with the huge influx of retail traders in 2020. And they know that the average retail trader is going to want to put money into EV stocks. There's a lot of momentum. And I bet you a lot of those funds, a big money, smart money on Wall Street was helping kind of push that momentum forward so that retail would continue to dump money into these EV and charging stocks. Now that that's kind of over, a lot of retail has actually, in my opinion, kind of faded in the stock market after February and March. So I kind of felt dejected. Or now that growth is kind of rotating and we're seeing a bit of rotation in the market, or like the Russell 2000s not really in favor, small caps, growth stocks not really in favor at the moment. And I think a lot of them are just coming back to more reasonable valuations. And what we want to do here at this point in time, in my opinion, is look for the stocks that are grouped with the growth and speculation and innovation stocks that all fell in February and March. Look for the stocks that are falling with them, but have actually already reached a reasonable valuation. So if you think Proterra is one of them, then I wouldn't doubt it. Like, I would buy more. I would keep doing research because eventually what I think will happen is that stocks that are already at good valuations, they might just get cheaper and cheaper and cheaper, but they're going to be the first ones to hit their floor, right? And they might be the first ones to bounce back really fast when the rotation comes back or when growth comes back in favor, which eventually it will, right? There's just cycles in the market. And I think that if I was looking at Fiverr Lemonade today, like Lemonade, yeah, it dropped 60% or something from its peak, still trading at a price of sales of 43, which is just crazy high, right? So you have stocks like that have crashed down but are still trading super rich. But then you have other stocks out there that are also maybe growth stocks that have also come crashing down, but now they're at reasonable valuations. So I think it's a matter of these sectors kind of finding a balance, finding a floor for their valuation where, okay, not just one or two is at a reasonable value and the rest are at trading at like 30, 40 times revenue, but now all of them are trading at that reasonable level, that reasonable valuation. And maybe that's when things pick up again. So at this point, you have to find the ones that maybe got there first, make sure they're a good company, and just have patience. I think one big thing as long-term investors we have to realize is that we can be right, but we might not see the result until Wall Street kind of sees what we've seen. And that's the whole game, is beating Wall Street to the punch, but you might just beat them to the punch for like by a lot. You know what I'm saying? Or sometimes Wall Street might just forget about a whole sector or just kind of disregard a whole sector and kind of waits for it to cool down and chases some other side of the market. But this is healthy. You want to see in like a healthy bull market, you want to see the money move around a bit, right? And so this is actually good. And now if you're someone who really just wants to invest in growth stocks, this should be the time when you're looking into stocks super heavily, when you're ultra focused on trying to find opportunities, because what we need to get in the habit of is finding stocks that are downtrending, finding stocks that are off their all-time highs, and seeing that as opportunity instead of, oh, the market doesn't like this, so I shouldn't invest in it. So hopefully this answers your question. I'm sorry there's not a bunch of like hard evidence here. I just wanted to record a quick video for you and just kind of share my thoughts off the top of my head. So yeah, hope this helps, and have a great rest of your day or night. Peace.